Hello friends, as promised I'm back with a separate video on Workmen Compensation Reserve and its treatment. Now today we will be discussing in detail about the accounting treatment of Workmen Compensation Reserve. This treatment is common in case of there is a change in profit sharing ratio or in case of admission of partner, retirement of partner, death of partner. Workmen Compensation Reserve is dealt in the same way. So this is quite an important item of balance sheet and the accounting treatment is the same. So let's start the today's session. Now first let us understand what is Workmen Compensation Reserve. So from the term you see it is Workmen Compensation Reserve. So you know that first of all it is a reserve. So where does it appear? On the balance sheet liability side. And what is reserve created out of? It is normally out of the profits which are set aside, appropriated into this account called as reserve. Now, this reserve, why is it created? The why part is here, that is a workman compensation. Now, why would you want to compensate workmen? Now, in case of businesses where workers are working, there is a possibility that there might be accidents in the workplace and the workers might be injured. Then for those workers have to be compensated for those accidents. Now, if such an accident occurs and there is an injury, it would have an impact on the business. It will have to pay the workers, so the profits of that particular year would be impacted. And therefore, in order to reduce the burden as a future planning, the businessmen normally create such a reserve where they set aside from time to time amount into those reserves so that that reserve is available, and if and when any accident occurs, then they can take out money which they had set aside into such reserve and use it for compensated workmen and thus not affecting the profit or putting undue pressure on the profit of the business of that particular year when the accident occurs. So I hope with that you have understood what is Workmen Compensation Reserve and its importance. Now technically if you speak, these are the terms we use. Workmen Compensation Reserve is appropriated out of firm's profits, so out of profits we are setting it aside, and it is to meet possible claim. The claim is not certain. If accident occurs, workers get injured, then only there would be a claim, and that claim is from whom? To the employees who might be injured on account of accidents which have taken place in the workplace. Now, this Workmen Compensation Reserve is found in the balance sheet on the liability side. Now, this you will be treating it. It will be there in the reserve on the liability side, but there are different situations when you will be dealing with it and you will have to pass entries to close it out. That is, the different situation that you will find is when there is a change in the profit sharing ratio. Now, when there is a change in profit sharing ratio, what happens? The partners were sharing the profits in a particular ratio, they want to switch over to a new ratio, and therefore they want to deal with several items that are already there in the balance sheet because this reserve was created when the old profit sharing ratio was being applied. Now with the new profit sharing ratio, when they are going to start, they might like to start afresh and deal with that reserve appropriately. Second case is when there is the admission of a partner. So in case of admission of partner, this new partner is just joining in. And this reserve was created at a time when the old partners who were there in the firm, they had put in the efforts, earned profit and created reserve. So those partners would feel that this new partner should not get a share. Let us start afresh. Whatever already reserve is there, we will take that and we will deal with it appropriately. Third situation is in case of retirement and even in case of death of a partner. Now here a partner is retiring or has died, so he is going out. So as he is going, his combined effort with other existing partners had resulted in profit and they were able to create that reserve. So he also deserves a share in that particular reserve. So as he is leaving, his share in those reserve also will have to be given to him. So these are the situations where you will be finding the Workmen Compensation Reserve and you will have to know how to deal with it appropriately, and that is what we are going to discuss today in detail in accounting treatment of Workmen Compensation Reserve. Now, these are the different situations that you will be encountering, the different ways in which you have to treat the Workmen Compensation Reserve. First, there might be no claim at all. So when the claim does not exist. And the other situation is where claim exists. So if claim does not exist, how would you know? One, they would specifically state in the question. Specifically, it is given in the question that there is no claim. Then you know that there is no claim. Then you would deal with it appropriately, which I'll be explaining it to you with an example in the subsequent slide. The second is when the question is silent. Means there is a Workmen Compensation Reserve on the liabilities of the balance sheet and you're undergoing a change in your partnership. At that point of time, if nowhere in the additional information they've given information anything about a claim lying against the firm from workers, then under such circumstance you can assume that there is no claim and the accounting treatment will be the same as I will be discussing for where claim does not exist. The second situation is where claim exists. Now when there is a claim, they will give you specifically that there was claim on account of workman compensation of so much amount. Now you will be encountering three different situations at this point of time and you'll be treating it differently in all these circumstances. Three different situations are, first one is where your claim is equal to the reserve. Means you have accumulated certain amount of reserve, say 1 lakh rupees, and your claim is also to the extent of 1 lakh. Then how would you account for it in the books? Second is where the claim is less than the reserve. Suppose the reserve is 1 lakh, but the claim is of lesser amount of 70,000-80,000. Then there is a different way in which you would treat the reserve. The third is where the claim is greater than the reserve. The reserve is 1 lakh, but you have a claim more than 1 lakh, say 1,20,000. Then you will have to provide for the entire claim of 1,20,000, but you have just reserve of 1 lakh. So these are the three different situations. So each of these situations I'm going to deal with in detail now. First situation I'm going to take is where the claim does not exist. Either the question is silent or specifically states that there is no claim against it. So we will take a situation that the Workmen Compensation Reserve is rupees, say 1 lakh. So the firm has accumulated 1 lakh rupees. And suppose the profit sharing ratio between the partners was say 5:3:2. And this situation where claim does not exist, what happens? There is no claim. So there is no provision to be created for workmen compensation claim. This reserve is now totally free. You don't have any claim. So what do? You give this reserve away to the partners. Suppose we take the partners are A, B and C. Then the reserve account on the liability side, it has a credit balance. You have to close it out now. Therefore, you debit Workmen Compensation Reserve account debit with the amount of 1 lakh. So with this debit, the Workmen Compensation Reserve account is getting closed. As it is free, you would distribute it amongst the partner. You would credit it to the partner's capital or current account. So write to B's capital or current account and to C's capital or current account. In what ratio? In their profit sharing ratio. What is the profit sharing ratio? 5:3:2. So 5/10, 3/10 and 2/10. So 1 lakh to be distributed divided by 10. So 10,000 into 5, 50,000 would be credited to A, 30,000 to B and 20,000 to C. So we are distributing the reserve amongst the partners. Now you would wonder why I have written capital or current account. If the firm is following fluctuating capital system, you credit it to capital account. But if they are following fixed capital system, you know there are two accounts maintained, capital account and current account, and therefore this transfer should be done to the current account of the partners in their profit sharing ratio. So this is a way in which when there is no claim, the reserve being free, you distribute it off. So you credit it to the partner's capital or current account. So this is done. Now we go to the second case where there is a claim and the claim is equal to reserve. So we'll take again the Workmen Compensation Reserve to be, say, rupees 1 lakh only, and we'll take that there are three partners A, B and C, and the profit sharing ratio is the same, 5:3:2, and suppose here the claim is equal to reserve, so there is a claim of 1 lakh rupees. Then now what happens? This reserve, what is available now, has to be kept as a provision now. So we would debit here again the Workmen Compensation Reserve account debit. So with this particular debit, we are closing out the reserve account. But we have to keep that 1 lakh to pay to the workers. So we create an account called as the Workmen Compensation Claim Account. So whenever the payment is to be made, it would be taken out from this account and would be paid to the workers. So this way you are creating the claim account. Now as the claim was equal to reserve, nothing is left extra, surplus is not there. So nothing would be available to be distributed amongst a partner. So the third situation we have is a claim exists and the claim is less than the reserve. So we'll understand it with the example of Workmen Compensation Reserve of rupees 1 lakh. Suppose the same partners A, B, C and profit sharing ratio is 5:3:2. Now here claim is lesser than. So let us suppose take the claim is 50,000. Then what happens? Same, you would be debiting the Workmen Compensation Reserve account debit 1 lakh. But out of that, how much are you supposed to keep aside to be paid to the workers? It would be 50,000. So we credit Workmen Compensation Claim Account of 50,000. And rest of the 50,000, what is the balance which is left? 50,000 is the balance which is available. So that 50,000 we would distribute in the profit sharing ratio. So we credit A's capital or current account, B's capital or current account, and to C's capital or current account in their profit sharing ratio of 5:3:2. So we are going to distribute 50,000 divided by the base 10 gives us 5,000. So 5,000 into 5, 25,000 is given to A. 5,000 into 3, 15,000 is given to B. And 5,000 into 2, 10,000 is given to C. So this is how we take out from the reserve to the extent of claim, keep it aside, and the balance surplus that is left, that is free to be distributed amongst the partners in their profit sharing ratio. I hope that is clear. We go to the next scenario where claim exists and the claim is more than the reserve. So now here, suppose same Workmen Compensation Reserve is of 1 lakh rupees. We'll take the same partners A, B, C, 5:3:2. Suppose we take the claim is, say, suppose 1,20,000. Now what happens? You have reserve 1 lakh, but the claim is 1,20,000 more. So entire amount of reserve you will have to set aside. But you find that claim is more, so there's a shortfall. So, as usual, first entry, there will be two entries. First entry would be where you would debit the Workmen Compensation Reserve account debit. To close out that reserve account, 1 lakh. But as you know, you have to create a credit to the claim of 1 lakh 20. So there is a difference of 20,000 in the debit. That would be debited to revaluation account. It is a account which is normally prepared, you would have seen, when there's a change in profit and admission or retirement, you revalue the assets and liabilities, record unrecorded asset liabilities, and also it is used here. The deficiency, whatever is there, is debited to revaluation account because it is a loss, and you would credit the Workmen Compensation Claim account with the total amount that is required, that is 1,20,000. So that is a way where we deal with entire reserve utilized and the shortfall is debited to revaluation account. Only in this situation, as you open revaluation account, there is a debit to revaluation of 20,000. You should close out that debit. So you will be passing one more entry where you will be crediting revaluation account, and revaluation account, you know, how do we close a revaluation account? After passing all the entries, we close it by transferring the revaluation profit or loss to the partner's capital or current account. And similarly here also, here because it is to be credited, revaluation account has been debited here, we have to credit it. So the debit goes to the partner's capital account. So you will write A's capital or current account debit, B's capital or current account debit, C's capital or current account debit to revaluation account. So you see the revaluation account that we created for covering up the deficiency is now closed out, and we would give it to the partners in their profit sharing ratio of 5 by 10, 3 by 10, 2 by 10. So that would be the 20,000 divided by 10, 2,000. So 2,000 into 5, 10,000 is debited to A, 2,000 into 3, 6,000 is debited to B, and 2,000 into 4,000 is debited to C. So this is how we deal with where the claim is more than the reserve. So I hope with this calculation you have understood how we pass two entries only in the circumstance, and also have understood the different ways in which we deal with the reserve. So as a conclusion, I would like to just summarize the entire Workmen Compensation Reserve treatment as having 4 different ways you'll have to approach. The first way is where there is no claim, reserve is free, you distribute it off to the partners in the profit sharing ratio. The second way, third way, and fourth way is where there is a claim. The second way is where the claim is equal to the reserve. You directly transfer the entire amount of reserve to the claim and nothing is left for distribution among partners. But where the claim is lesser than the reserve, you transfer from the reserve to the extent required to the claim and balance whatever surplus is left, that you distribute amongst the partners. And finally, where the claim is more than the reserve, then the deficiency in the reserve, whatever you have, you debit it to the revaluation account. But don't forget, you will have to pass one additional entry where you close out the revaluation account by debiting partner's capital account and crediting revaluation account. So this is about the accounting treatment of Workmen Compensation Reserve. I hope it was useful to you. If you like the video, please do like and share. And if you have not subscribed to my channel, please do subscribe to the channel to get continued notification of the upcoming videos. Thank you. Have a great day.